Hi, I'd like to welcome all of you to the second episode of Wyckoff Wednesdays. And today we're going to be covering the difference between reaccumulation and redistribution and a gold trade that we call live. So basically, it's all about where price is like on a higher time frame. To You have to have higher time frame points of interest to determine the difference between reaccumulation and redistribution. So what I'm going to do now is I'm just going to draw like what you want to see. So let's say you're trading on the 1 minute chart. So you're going to go and look at the hourly chart for areas of interest. So if we are in a downtrend, so price is currently moving down, okay? Now, let's say this is our current area. And we know over here we bought to sell on the higher time frame. So you're going to put a fib and look for an area of interest on the higher time frame where you expect distribution. Okay, so you would know this is distribution in this area, not reaccumulation. Even though we're moving up, we should expect distribution in this area. We should expect that lower high to form from here. So this movement, creating the next lower low. And that's really important when it comes to identifying the difference between reaccumulation and distribution. So the same principle applies if we're in an uptrend and we reach this area, you're going to pull your little fib, and now we're in an area of interest to look for long positions. So we don't want to look for distribution here. Even though price is currently moving down on the lower time frames, it looks like a trending environment on M1 or M5 or M15, but on H1, we're expecting in this area to create our higher high. And therefore, in this area, you'll be looking for reaccumulation, and that's really important. So you're never going to be wanting to trade in these areas because it's difficult to tell whether we are accumulating or distributing, if that makes sense. So have your area of interest, trade that area, and yeah, just stick to your rules when it comes to that. Never trade like in the blind. Have your higher time frame areas of interest. So now we're going to recap a trade that we did this week. Now, it's important to understand that you always have to be in a high time frame area of interest. So over here, if we look at H1, okay, you're going to see in this area, okay, we bought to sell because we broke structure. Okay? So you're going to be looking for distributions in this area. So what you're going to do is mark this out in real time, okay, and then wait for price to trade into this area. So we're going to be doing nothing in this area all the way up. We're not participating in the market. We're being patient and waiting for price to reach our area of interest. Okay, so let's denote this area. I'm just going to draw a little rectangle. So within this area, yeah, we're going to be looking for distribution. So if we go back to our lower time frame, sorry, I'm going to have to scroll back for a while. So if we go into our lower time frame, this is our area of interest. Okay, as you can see, we tapped into it. Now, everything in price is fractal. So whatever's happening on the high time frame is happening on the lower time frame as well. So over here, we had that break of structure. We created a higher high, but we also created a low low. So in this area, we bought to sell. Okay, now if we look at this, look what volume is doing. This is a really important concept. So we made a new high, okay, but volume made a lower high. As you can see, volume is descending throughout this whole upward move. So this is telling us that the market is weak. We're going to see a reversal. And as we tap into this area, we see that reversal. Okay, now we do the exact same thing on M1 as what we did on H1. We mark off the 50%. And then what's going to happen is at this 50%, we're going to be looking for a U-tag, an upthrust and distribution. So as we can see over here, we were trading in a range, okay? And because if you're looking at this and you're familiar with accumulation, this might actually look like a spring because we had equal lows and we swept them and moved up and we created a new higher high. But that is against our higher time frame analysis. So if you were playing the spring, you would have been stopped out, as you can see. So in this movement, we created a whole new buy to sell. So this is a confirmed, this is redistribution. We traded in a range, moved up, tapped into that higher time frame area of interest, and now at the 50%, you can look for short positions, and that's actually how we caught this trade. So it looks so simple, but to do it in real time is a different story. Safe spot to put your stop loss would be above this high forming here, since this would be seen as a UTAD, upthrust and distribution, and price should not trade higher than that area. Now, as simple as it is you just go back to H1 to find a logical area for your TP. So what would be a logical area for your TP? Well, you'll be expecting a lower low from this area, okay, since price is in a downtrend. So we're going to make a low that's lower than this low. It's as simple as that. So if we go back to M1, we know where we're going to be taking profits. Now, because you're taking a higher time frame trade, but you have a stop loss that's based on M1, all of a sudden you have a beautiful trade. So I'll just move back to our area, sorry. This trade happened early, I think the 11th or the 12th of February. There we go. Yeah, it was 11th February. So now you have your higher time frame area where you're looking to take profit. And this trade was a 1 to 20, 20.87, almost a 1 to 21. And the analysis was really simple. Now, since we had our higher time frame bias in mind, we can always look for more entries. So this trade, we got stopped out on because we tapped above the UTAD and traded back into the higher time frame area of interest as denoted by this buy to sell. So that's no problem. You need to be used to re-entering trades because your stop loss is so small. So what happened was we formed a whole new redistribution, and the exact same thing occurred where price was rising, okay, from this high to this high. We obviously made a higher high. Price is creating a higher high, but our volume flow is bearish. That's a really strong divergence. Now, in terms of liquidity, what happened? We formed a trend line. Now, this trend line got violated. Everybody selling this trend line has to buy back their position, okay? And what happens when you buy back? The large operators can sell that to you, okay, if that makes sense to you. So this created liquidity. This move created liquidity. We tap back into this higher time frame, well, buy to sell, and the higher time frame area of interest. Now, when this happened, this is our UTAD, and this is our last point of supply over here. So price should not trade above this area. This is our LPSY, okay? And this is our UTAD. This is a creek. Sorry, I'm not going into any of the labeling because we believe that the actual labeling and the schematic itself isn't as important as understanding what's happening, because Wyckoff only really helps you to understand what's going on in a range, but you need to use your understanding of price action and smart money concepts to know where price wants to reverse, where UTAD is going to form. So that's what we do over here at Aero FX. So at our lowest point of supply, we had a buy to sell. So a buy to sell is valid when we break structure. So we broke below this low. So this buying movement was actual buying in order to sell. So like we've been doing all the time, we mark off the 50% and that's our entry, okay? So you would enter at the 50% and your stop loss can be above the LPSY because price should not trade above that. Okay? So even though we got stopped out on our first trade, that's negative 1%, fine, no problem. We re-enter because you shouldn't get scared. And what actually happened was, resulting from that, we actually got a better trade. We got a much better risk reward. And as you can see, this trade gave a risk reward of 1 to 53.7. That is insane. And TP got hit, as you can see there. And what happened in this area is a lot of traders might have been looking for accumulation, but it was redistribution, since we know, according to structure, that we should form a low low from this area. As you can see, we did form a low low. I hope you found this helpful in understanding where to look for accumulation and where to look for distribution, since this is a confusing topic for a lot of traders, and trading a schematic itself won't make a lot of sense to you since they look extremely similar. And a lot of the concepts like a sign of weakness or spring could be confused. So I hope you enjoyed the video, and we'll see you next week for episode 3.